The tax reporting season is in full swing. And there's one question that I'm asked most often. And that's, how does withholding tax actually work for me as an individual investor? So today, we're having a closer look at withholding tax levied on shares, and shares only. You may know that in Switzerland, withholding tax has a declaratory purpose. It means it is rather high with 35% because the authorities want to make sure that you declare your investments and then you can reclaim all the withholding tax. And that's important. In order for you to reclaim the withholding tax, you need to declare it. This becomes very interesting in partnership structures. We'll look at this in a separate video though, because they are their own animal, I would say. We focus on our shares. Now, on international level, it is a bit different. There you have to make sure that you don't run into any double taxation. It's what you do in your annual tax return. You declare your shares, you declare the income, and you declare the withholding tax that you cannot reclaim. And then you will file some attachments where the tax authorities actually can see, okay, this amount has been paid out and the respective withholding tax amount has been deducted. This means that your income will not be taxed again. It will be credited, the foreign withholding tax, because you already paid tax on your dividends, just in another country. This is based on double tax treaties though. In the situation where there is no double tax treaty, you will need to have a closer look. For the reclaim of the withholding tax, the Swiss Federal Tax Administration publishes country manuals. So for each country where there's a double tax treaty with Switzerland, you will have a separate document per country where the details are explained and also the refund procedure. You will find the link to all of these manuals below, and that's actually all there is. It's not that complicated, but it's a matter of, as always, knowing how to do it. If there are any questions, Stephanie Fuchs Consulting, we love these questions, of course, and we keep you in the driver's seat with your taxes. Taxators, the same applies. You need to declare your shares and the dividends and the withholding tax paid to file for a reclaim, respectively, to get the withholding tax back. That's very, very important. Meaning that you will have to file a tax return, and then the tax authorities will compare, values you declared in your tax return and the resulting tax amount due, and the taxes that have already been paid in the process of the tax at source. And then you will either get a refund or you will have to make some repayments. But in any case, you get your withholding tax back. So if you want to reclaim your withholding tax, you need to declare